Hello, and welcome to The End of the Chain. I'm your host, Samuel McCulloch. In this episode, I'm joined by Loong Wang, the CTO for Ren Project. Ren is the first open protocol that provides inter-blockchain liquidity for decentralized applications. And it's bringing Bitcoin Cash, and Zcash to Ethereum in the form of bridge tokens. Loong and I talked a lot about privacy. We also jumped deep into how the tech is working for Ren and the impact that it's going to have on Ethereum and DeFi as Ethereum becomes the aggregator of liquidity. I really want to thank Loong for joining. Make sure to sign up for our mailing list. Also, 5-star, subscribe to the podcast, and leave us a grant or a donation. There's links in the bottom. Any support that you give to this podcast goes a long way. All right, let's jump into the episode with Loong. I want to talk about the transition from last year because I actually took part in the ICO, and I remember you guys being focused more on dark pools. So it's interesting to see the transition into being into having the RenVM and the shift into your functionality and how that evolved. And then
I want to talk about that.
Yeah, and then I want to talk about like privacy in general, and because it's not so much. I mean, the tech is important, right? But there's bigger questions of why you're addressing, like why Ren was built, right? So why is a privacy preserving dark pool necessary for interoperability, right? And I guess these bring up broader privacy questions of connected to certain things about these token tracking companies that will exist here in the future, which their whole existence is going to be monitoring on-chain transactions.
Yeah, and it's going to be interesting seeing how regulatory bodies kind of respond to how users will begin using systems. But yeah, we can definitely dive into all that stuff.
Have you? I mean, are you able to comment on any of the regulatory stuff?
I mean, there's nothing limiting me in that sense.
I guess
it's
like
just my expertise.
Right. I guess my question would be like, if you're because Ren is essentially creating a derivative contract of whatever underlying token there is. Does that mean that securities laws are applicable to?
Yeah, right. Well, it's kind of an interesting one. The legal advice that we've gotten so far says that it's not an issue because, for example, Bitcoin is pretty well understood to not be a security. And it's not really a derivative in the sense that it's actually just like a one-to-one representation, and you can always claim back one for one.
Right.
And there are other systems that are similar to what we do, but they kind of are derivatives in what might be considered "quote unquote" a regulatory sense, because you can't always get one Bitcoin back for them, or they're explicitly designed in different ways. But yeah, right. I can talk a bit about that. There's nothing like, there's no like golden handcuffs that say, oh, you're not allowed to talk about this in public. It's certainly not my expertise, so I try to avoid talking about things I'm not an expert on.
Yeah. I wanted to talk about running a dark node as well too, and what the hardware, like minimum hardware specifications are, and do you expect that to be like increased or lowered? Have you done case studies of how much it's going to cost to run the node a month? Have you guys looked into that yet?
Yeah, we have. We've done some modeling specifically around, because one of the things that's really important to us is the profitability of dark nodes, because obviously the more profitable they are, the more likely people are to run them.
Yeah.
And that's good for the network. So looking at how many dark nodes can the network support, because the more dark nodes, the more secure. and so we've obviously have to factor the cost into that. But what's really cool is that when you do those models, the cost of the dark node actually, when you take the limit of liquidity to infinity, the cost of the dark node disappears. And even when you say, okay, well, realistically, liquidity is not actually infinite, even just when you take it up into the millions, those numbers sort of disappear rapidly to zero.
Have you looked at like incognito?
Yeah, I've looked a little bit into it. My understanding is that it's like a side chain where inside the side chain things happen in zero knowledge.
Correct. Yeah, but one thing that they do, which may be interesting for you guys to look at, is they sell their nodes. So for like $400, you can buy a node that you just plug in, and then they already have like an app where you can.
Oh yeah, right. So like actually, we have thought about that actually, like building like custom hardware that's just for a dark node and all this kind of stuff. But certainly we can jump into why that's a challenge.
I mean, it's just it would add an extra revenue stream for your company. Yeah.
Yeah, true. I guess we're not really like the Ren companies not trying to focus on revenue.
No, I understand. I understand. But they have check it out. So it's incognito.org, and the first thing that you get to is their little hardware thing. So they have, and I guess like this would be something to speak about, right? Is because I know you guys are partnered with Aztec, right?
Yeah,
so
that's right.
the token that pops out on the other side, the Ethereum token, couldn't that be preserved with, or couldn't that have privacy preserving features enabled through Aztec?
Yeah, that's exactly the hope.
Because what is what's the first stablecoin that is? There's a stablecoin project that's going to be using Aztec as well too. That I just can't pull off the top of my head right now. But it could work in it could work in a similar way. I guess again, all these come back to the privacy, which I want to talk about later, because I know that the trustless token transfers and swaps is only a small part of what you guys are working towards. Later comes privacy preserving data transfers across chain, or privacy preserving data transfers from one siloed database to another. Correct?
Yeah, I mean, essentially, once you have an engine that's capable of doing zero knowledge computations of any kind, it becomes a natural question to sort of look at how far you can take that and what you can do with it. And of course, there's lots of interesting challenges to tackle along the way. But a broader concept of privacy is certainly something
right.
that's interesting to us, and that we're hoping to explore once we've done interoperability and we've sort of gotten adoption there.
Right. Because I mean, for me, like privacy is probably the most important topic that I see moving into 2020 as we start to speak more about actual privacy rights and what these companies that we are dealing with, are we able to limit?
Yeah, we're seeing more and more concerns in like the non-blockchain world as well. And so it's like everyone who's not probably should be staring at blockchain and saying, hey, you guys going to do something about this too?
So
it's a very natural use case.
My kind of broad question for the blockchain community is, does blockchain break the surveillance economy, or just does it fix it in place for, or just does it it's not even fixed in place. It's just, does it continue to enable the mass surveillance that takes place on a daily basis? Right. Because, yeah. I
mean, I think blockchain can fix it. Well, I don't think there's something inherent about blockchains that fixes that. I think it's actually like, zero knowledge cryptography, or just cryptography in general, is a parallel topic to blockchains. And it just so happens that they marry together really, really nicely. Like you can talk about blockchains without talking about finance, and you can talk about finance without talking about blockchains, but the two of them go really well together. And I think cryptography and blockchains are a very similar relationship.
So one of the one of the things that is, I guess, so there's this growing connection between coming mainly through regulatory shifts and growing regulatory watching of exchange, is that they'll soon have I'm guessing, a unified database of all deposit and withdrawal addresses for every single major, pretty much for all chains, right? And that will allow.
I mean, I guess they already do, right? They just have to look
correct. And then once they have the deposit and withdrawal addresses on the anything coming into an exchange that requires KYC AML, they then can use that to pair with companies like Chain Analysis to develop a full picture of all transactions that take place on whatever chain exists that doesn't have any privacy preserving features.
Yeah, I think people are going to have a hard time like pushing any kind of blockchain based agenda without addressing
correct.
privacy. I think it was something that everyone up until now was like, oh, we can deal with that later. And alas, we have arrived at later. And now it's time to think about it.
I'll send you a book. So most of this is just to go on about myself a little bit. I when I was 18, I joined the military, and I worked originally I was trained as a Russian linguist, but there was no Russians in Iraq at the time. And so I eventually switched over to being a signals intelligence analyst, and I worked. So the NSA doesn't have, it's like 50-50 split between military and then civilians. And so the military people are the people that go out into various corners of the world and collect information. And then all that collected information gets sent back, and analysts like myself would dig through all the metadata and piece it together to produce reports on just people, right? And then we would, we're the military, we target people, go kick down doors, arrest them, put them in somewhere. Maybe they see the light of day again at some point. But I, having worked in the intelligence community and seen the capabilities of storing, tracking, and then analyzing metadata, and this was 10 years ago. This was 2006 and 7, and understanding the rapid growth in the amount of data, because there weren't even iPhones back then. iPhone was 2008, right? So the huge amount of data that we produce on a daily basis, from the time that we wake up to the time that we go to sleep, would allow a intelligence analyst with the full capabilities of the NSA, like myself, to build a much, much bigger picture about a person.
Yeah, I can only imagine it's easier now than it was 10
correct.
years ago.
And
I find it hard to believe.
Yeah, exactly. And so, companies like Google have even more information than the NSA does. And they have even smarter people working there, but they're working in a different respect, right? So they're not working to target people for criminal activity or political means. Instead, they're working to target everyone.
Yeah, and I think that's actually one of the things that I worry about, though, is that like the data surveillance, if you want to call it that, that's being done by companies like Google. They're not like built in the framework of surveillance, if that makes sense. But then they get provided to surveillance needs. So like then the NSA comes in and says, "Oh, by the way, Google, you need to give us all this information." And then Google says, "Well, if we'd known that we were going to have to participate or survey people for these means, like maybe we would have done it differently, or we would have been subject to different regulations." I'm sure that the NSA is technically subject to different regulations in what it can do than what Google is subject to. Like I can only imagine they're different. One's a government entity or military entity, and the other isn't. But then they just seem to collaborate so openly with each other, at least. But that's completely opaque to the public.
Exactly. And that's the problem, right? Is that nobody knows that they're being tracked, for one. And then also the data that's being harvested from them is not well understood by the person that's actually giving it up. And so, when it comes to Google, right, their whole business model was built on surveillance. They they were in the depths of the .com bust when they figured out that they had all this exhaust data on users about the click-through rates and about what they were doing and typing and then deleting. And so all this data they started harvesting, and then they started building behavioral models of the users who came.
Yeah, but I think my point is that like there's a big difference between doing that for business, which I'm slightly more okay with. Like if you told me my data was getting scraped for Google and it was definitely only ever seen by Google and was only being used for business purposes, I'd be like, that's great. If you're going to target me with ads about things that I actually want, that's good. If you're going to give me better search results for the things I'm looking for, that's good. But if you were to tell me the same data was then getting passed over to a military organization, I'm suddenly getting a bit less comfortable with that. And that's not what I like. There doesn't seem to be a way to opt into one thing and opt out of the other.
But what if I'm taking all that data and then using it to, so I'm taking all that data and I'm building models, right? And then it's not just providing targeted information. I'm also running psychological operations, which these companies have done to modify your behavior to do certain things out in the real world.
Yeah, I think that I mean, when you become the subject of the manipulation as opposed to the business being the subject of the manipulation. So he's like, oh, we're going to manipulate our business practices based on feedback that we're getting from the community. I mean, I think every business does that, and you have to, right? But then to go and actually try and change the behavior of your users explicitly, like it's a weird line because I guess that's what advertising is meant to do, but it's just become such a blurred line. Like,
so they have,
there's no doubt that these.
Yes, they have these billboards. I just listened to an NPR episode the other day, and they have these billboards now, which they track your mobile phone, and so they can reach out and they can identify your mobile phone and then connect it to their database of advertisers, and then based on the information that is connected to your phone, they can provide specific targeted in real world advertising to you, right? So let's say you're like walking around the mall and they kind of, they have a good idea that you're going to go buy some pants, right? So it could pop up and it could say, here at Target today, 30% off on all jeans. And then you would see that.
That's so messy.
Right. You would see that and it would shift your behavior and say, oh, I should go there to buy some pants today.
So, I mean,
so of course all the data.
I don't think anything can solve that, right? Like, because something that I think the root of the problem for me is, so I'm not on Facebook anymore.
That's good
because it's been a long time since I've been on it, but it's a huge hindrance for my friends who are on Facebook and who use Messenger as like their primary source of communicating with each other. And what's kind of interesting is when you jump onto the Facebook platform and you say, okay, here's our EUL. This is what we're allowed to do with your data. And because at the end of the day, like you are opting into all of this. The problem is that if I opt out of it and I say, actually, no, I'm not comfortable with that, I'm not going to participate. Facebook has done such a great job at isolating its ecosystem from all other ecosystems that I've just cut myself out. And there's not actually, like, realistically, you're not actually giving someone a choice. You're not saying, hey, would you rather use this platform, which won't harvest your data, or use this platform, which will? Those platforms don't talk to each other. So if everyone is on the other platform, you're basically asking the question, would you like to sacrifice your social life, but also sacrifice your privacy? Or would you like to keep your privacy but have no friends? Obviously, that's an extreme trade-off that you're making, but that's where I really see the issue is that, like, even if blockchain solves all this, and even if we have all the cryptography and all the regulation, how do you stop someone from opting in anyway? Because socially speaking, there's a huge pressure or a huge incentive to behave this way, especially when the average person doesn't understand what's going on. Like, none of my friends care about data privacy. They kind of get that it's a thing, but until you talk to people who've worked in the industry like yourself, those are the only people that are like trying to raise alarm bells, being like, yo guys, actually, it's crazy what we have on you.
Right. But if you asked any like normal person, like, do you want to have privacy preserving features? They would say yes. And if you ask them, if you like laid out clearly before them all the data that was being taken to them, right? Because, now you just find a 300-page terms and conditions that, hidden deep in it shows that, they're not liable for the information that's taken when they give it to third parties, it's not liable for the information that's taken, and so on and so on. And so, and also the amount of data that's collected. So, GDPR kind of opened the gates a little bit to see all the cookies that were being put on your computer, and and the ability of to go to these companies and see all the data that they're collecting on you. Yeah. So I guess this kind of like ties in nicely with what Ren is doing, right? So Ren provides, eventually it was in the beginning, it was to provide dark pools, right? And it's kind of shifted into interoperability between chains. And one of the things that it does is that it has privacy preserving features between the two chains that are, or two data silos that are being used, right? So if you're moving,
so well, I mean, at this stage, it doesn't.
Yeah.
In the initial release, it won't do that. And I mean, one of the core reasons for that is Bitcoin is not private. So at the end of the day, the first transaction of Bitcoin to become private is still visible, right? So you can take your Bitcoin and you can put it into RenVM, and RenVM can do all the magic secrecy stuff that it wants to do. But that initial buy-in, if you will, is always going to be visible because the place that you're starting is visible. In the future, we'll be able to support secrecy on platforms like Zcash. So where Zcash can already do private transactions, and we can preserve that level of privacy as it moves from one chain to another, so that you could send Zcash from the Zcash blockchain to the Ethereum blockchain and have no one know exactly how much was getting sent. And then once it's on Ethereum, you can, because of the smart contract logic that's there, you can do all sorts of wonderful things like what the Aztec guys are doing, where you can take an ERC20, you can kind of bundle up into this Aztec notes system and do all these private transfers there. And so while your Bitcoin is on Ethereum, maybe it's private there. But then again, as soon as you bring it back out into the Bitcoin ecosystem, it stops being private immediately. Those secrecy features are sort of a phase 2 for us.
Yeah, because it's important, isn't it, to be able to allow, because it will be large sums of value to be transferred between two different blockchains and preserve that,
or even
privacy
small amounts of value. I mean,
right.
I think it's actually, I find it harder to convince people about the privacy of large values than small values, because, if I'm moving millions or hundreds of millions or billions of dollars around, people think, okay, well, there should be some level of accountability, and certainly it's worth being able to track that kind of money and know the corporations are doing the right thing, and so, okay, fine. But the $5 transaction that you're spending on coffee, do you want someone to be able to trace that and therefore know how much you get paid?
Right now.
Or do you want someone do you want to know how much the barista is getting paid just because you paid them $5 for the coffee? That's crazy, right? That's definitely not. And people get buy-in for that because that's a very, you don't have to get weird and philosophical about privacy. It's just, that's a very clear, clean-cut use case of, when I buy coffee, you shouldn't be able to know what my salary is, or how much money I have in my wallet, because then when I walk out of the store, who's going to mug me and convince me to try and hand over my passphrase? Those are the cases that I'm also worried about. I guess maybe more so worried about, because I think the larger companies will have alternate solutions, such as bundling all their assets in with a custodian, right? That can take care of everything for them. It has insurance and all this stuff, and then it kind of, custodians naturally act like mixers. So you might be able to tell that a custodian has $1 billion under management, but if they're a publicly traded custodian, then they have to probably report on those numbers anyway.
Well, it comes into that. I think it matters because everything is public. It allows for front running, right? And almost malicious front running if the values get too large. To say that there's already.
Yeah, I mean, that certainly isn't an issue of itself.
Yeah, so there's already token transfer, token. There's the whale alerts that you can get for Bitcoin and Ethereum to show that this is moving from one wallet to another, and I'm sure that there's funds out there that use this kind of tracking software to watch when large amounts of Bitcoin and Ethereum and other tokens get moved in and out of exchanges, so that they can try to get a bigger picture of what these larger whales are going to do.
Yeah, I mean, there's so many layers of privacy. It's hard to know where to begin and where to end the conversation at particular levels. Like at one level, there's anonymity, right? Like where maybe you can see all the values moving around, but you can never tell who they're moving between. So you can see that $1 billion got moved, but you can't tell where it got moved to or where it got moved from. You just see that it moved. That's one, layer. And then the other layer is maybe you hide the amounts, but it's not anonymous. So you can tell that I transacted, $1. You can tell that I transacted some amount from my wallet to your wallet, but you can't tell what the amount was. And that's also kind of useful in its own way. And then obviously there's combinations of the two. And then there's also the question about computation. Can the computation be hidden? And that way, that's a different question. Token transfers are one thing and value transfer, but what about the actual execution of contract logic? Where the exchange, the actual logic is being done in secret, which helps you prevent things like front running. Because if the values are secret and they're secret to the exchange as well, the exchange has no option but to try and execute in secret. Otherwise, it would have to reveal the value first, which kind of defeats the point.
So how does it work right now? Are people able to track when, let's say I'm turning Bitcoin? So just to back up one second. So RenVM allows for trustless issuance and swaps of tokens from one chain to another. So if I have Bitcoin, I can use RenVM and I can pop out I think it's called ZBTC on the other side.
It's called ZBTC on testnet, but yeah, it's called RenBTC once mainnet comes out.
So RenBTC on the other side, and it's a one-to-one trustless representation of that Bitcoin on Ethereum for now.
That's right.
And there's other tokens that are supported, so Zcash and what are the other?
Bitcoin Cash.
And Bitcoin Cash, which are supported at the moment. So it allows for liquidity to be transferred between chains, because even though Ethereum has a lot of cool stuff that it can do with DeFi, it's not the most liquid chain, and that's held by Bitcoin. But one of the problems with Bitcoin is that all that liquidity is siloed inside Bitcoin itself. And so RenVM...
Yeah, I think the big problem is that it has no scripting system. Or the scripting system available on Bitcoin is very primitive. So you can't build all these marvelous, complex, strange DeFi applications that you are able to build on Ethereum.
Right. And so because of that lack of that scripting system, being able to import it into Ethereum kind of opens up everything to all the DeFi products that are being built at the moment. Yeah.
Yeah, that's pretty much the elevator pitch.
Well, I should have let you do that. So
it's fine. It's actually good. It's good to get others to pitch it back to us, and then we see whether we've done a good job of communicating.
Yeah.
But yeah, that's exactly the mission.
So when I use this, so let's say I'm taking my Bitcoin from the Bitcoin network onto Ethereum. How is that? What is the technical? I guess let me reframe the question. So when I take that, when I move my Bitcoin from the network, when I move my Bitcoin from the Bitcoin network to Ethereum, what data is, analyzable? And
what's moving around?
Yeah, or what kind of metadata is produced on the two chains? Like, would I be able to see, let's say I'm moving one BTC from Bitcoin network to Ethereum?
So that's completely visible right now.
Right.
You can trace that. So you can audit that directly and say, okay, Sam, he sent one Bitcoin to RenVM, and then RenVM minted one RenBTC for Sam on Ethereum. Those are traceable. So you can think about, at the moment, RenVM doesn't provide privacy during its interoperability. And the reason for that is that you can sort of query RenVM and say, hey, this RenBTC that you authorized to be minted, can you please tell me why you authorized that to be minted? And RenVM says, well, that's because I have this Bitcoin that Sam sent me, and you can see the transaction. And that allows you to audit it and verify that, okay, actually, that did happen. And unfortunately, there's no way, even theoretically, to hide that, because at the end of the day, Bitcoin is not inherently private. So that first transaction to RenVM, at the very least, that transaction has to be visible, because you're moving from a public system to a potentially private system. Now, if RenVM, so sort of in the future when it integrates with Aztec, and then essentially you kind of have two versions of RenBTC on chain, right? You have the RenBTC public and the RenBTC private, and you can swap. So you have this kind of like triangle of interoperability between Bitcoin, RenBitcoin, and private RenBitcoin. And they can all just move liquidly between. They're all one-to-one in their representations. And so that would allow you to send one Bitcoin to Ethereum, and it would appear there privately for the first time. Up until that moment, everything is visible, as visible as it is on Bitcoin right now. But then from that moment, it's as private as you want to keep it, and as private as Aztec allows it to be.
And what will change with later implementations? So when you get to the full mainnet release, is mainnet 1, right? So when that's released, that will have privacy preserving features as well too, right?
So actually, mainnet 1 is actually still just our sort of initial release, but fully decentralized. So the sub 0 to 0 to 1 sort of phasing is actually just about decentralization. When we launch the system, it'd be irresponsible to launch it immediately as a fully decentralized ecosystem, because it takes time to get a little bit of adoption and to make sure the economic incentives are stable, to make sure the nodes aren't just rushing in and out of the system. And it gives us a chance in terms of governance to make any modifications that we need to make to the incentive structures, because you can do all the testing you like, but until you're out there in the real world, the incentive testing that you're doing is not real incentive testing. But once we get to mainnet 1, that's the reason we call it 1, is that's version 1, finally there, it's all decentralized, it's all ready to go. And now we can look at feature additions, and that's when we'll look at saying, okay, what about private interoperability? And private interoperability will really come down to working with privacy coins. And the one of most interest is Zcash, because Zcash is essentially a Bitcoin clone, but with the option of doing shielded transactions. And so the idea is that maybe you can do a shielded transaction through RenVM. So you'll be able to see that the Zcash went to RenVM, and you'll be able to see that it appeared on Ethereum, but you won't be able to see how much was transacted.
Would you guys be able to implement anything like Tornado Cash into the swap process? So you have fixed amounts that fixed amounts that you could put in.
Yeah. So once you have RenBTC on chain, it's just like any other ERC20 token. So you could, if Tornado Cash supported RenBTC, then you could mix RenBTC through Tornado Cash. And one of the cool things about RenVM that is distinct from any of the other interoperability systems at the moment is that it integrates directly with smart contracts. So you don't actually, as a user, even have to necessarily realize that you're interacting with RenBTC. All of that is hidden from you, or can be hidden from you, depending on how you want to interact with the system. And so you could rock up a tornado.cash and then deposit Bitcoin into it using a normal Bitcoin transaction, and it would just appear inside Tornado Cash, and then at any point you could sort of withdraw it back out as normal Bitcoin. But behind the scene, what's happened is you've transitioned it through RenVM, it's turned into an ERC20, it's been put into the Tornado Cash smart contracts, it's been mixed, and then however many days later you've taken it back out again, and you've burned away the RenBTC, and you've reclaimed your one Bitcoin. And that mixing process is sort of not implemented by RenVM itself, but it's something that it's more kind of the other way. It's more that Tornado Cash leverages RenVM to get Bitcoin into its system, which is kind of the angle that we're trying to go with RenVM is there's no specific system that RenVM aims to support. It just aims to create a generic flow for Bitcoin that you can interact with a DEX or a lending platform or a mixer or whatever it is that you wanted to interact with.
Right, because coming back to what you were talking about earlier, there probably will be. I mean, there's a lot of variation in blockchains that we have right now, and all of them have different scripting and language sets that they use. And one important thing will be able to draw liquidity from larger, more valuable blockchains like Bitcoin or Ethereum, and be able to instantly put that onto whatever chain you're using, right? So, and I think that's probably one of the big developments that we'll see over the next couple year or two.
Yeah, I mean, our dream this year is to take those first steps into getting to a stage where, I think long term, what you'll end up with is that users won't even necessarily realize what blockchain they're interacting with.
Mm-hmm.
And that can be
that's
a
the
good
goal,
thing
right?
or a bad thing. It depends, right? I mean, to some extent, if my ERC20 token is living on EOS, I'd really want to know about that so that I could get rid of it ASAP. I just throw some unnecessary shade out. But it is important that users understand the underlying security implications for the assets that they hold. As an Australian that has Australian dollars, I have some understanding about the Australian government and its stability versus, the Japanese yen or even the US dollar. It's kind of reasonably well understood that, a sovereign currency is tied to the state. Whereas if you go too far and you end up in a direction where users really have no clue what blockchain their assets are on, they're not 100% sure on what the security really means, right? So if you're holding Bitcoin, but you don't know what blockchain that Bitcoin is living on, you may not know what the security implications are. And that's really important. Blockchains are really about the ability to self-govern and the ability to self-control and be responsible for your own assets, which is sort of the price of freedom, if you want to call it that. And privacy is self-sovereignty.
Yeah.
You don't have to go as far as recent events on Twitter to see that can go well or it can go badly. And really the important choice is that users understand what's going on. But from a user experience perspective, it would certainly be great if people had got to stop thinking about the interoperability process. They don't have to think about wrapping and unwrapping. They want to use the system. They use the system.
I mean, that's one of that's your main competitors right now, is to be able to provide a alternative to wrap-BTC.
Yeah, so we actually we started wrap-BTC with the Kaiba and Biko group.
Oh, you did? Oh, wow.
Yeah. Ren was one of the three OGs, and we maintain as a merchant on that platform. The wrap-BTC is certainly a very different approach. For people that want a trusted system, which is actually some people, wrap-BTC is perfect for obvious reasons, because you can trust Biko. To an extent, some people in the ecosystem, maybe it's institutions, maybe it's skeptics, they may actually have more trust in an insured third party like BitGo with a big reputation and a legal framework around them than something like RenVM that doesn't have a legal framework around it. And if it was to be attacked, would you be able to sue somebody? And if so, who? And, who's insured, if anyone? So really, it depends on your use case. I think for DeFi and blockchains in the spirit of those things, then obviously RenVM makes more sense because it is decentralized. So if you actually want that permissionless, trustless aspect and you prefer that, then that's the way to go. I think the reality is we'll see lots of different interoperability solutions, all with different niches that they end up filling.
Do you think that the regulated structures will capture more value than the unregulated structures, like the one that you're building with with Ren?
It's hard to say. I don't think so because of the user experience. I think the average user really struggles with something like wrapped Bitcoin right now because it's a weird process to try and get a hold of wrapped Bitcoin. You have to go through a merchant. The merchant has to do KYC with you. And already those two things are huge barriers. And it's kind of funny. I always feel a little bit dodgy when I say, I don't want to do KYC. But, you kind of seems like, wait, am I doing something illegal? Why don't I want people to know who I am? But really, the reality is that I don't trust people that maintain the security of my data. Recently, there was a big hack at my old university, and they leaked all sorts of information about students and tutors and teachers and all this kind of stuff. And I remember thinking, that sucks because we didn't get a choice. When we signed up to that university, they were like, okay, you need to scan your passport so that we can, sign you up and enroll you. And you weren't able to be like, actually, I don't trust you to keep my data secure. It's not that I plan on doing something illegal at university. I don't even know what that means. It's just that I don't want some Chinese hacker coming along and getting on my data, which is exactly what happened. And that's more the question, I think, that gets raised there. And that's the level of comfortableness that people just don't have and shouldn't have, really. Security in a centralized fashion it's impossible. Everyone gets hacked eventually.
Exactly. And it doesn't even have to be like your university could have done an amazing job of preserving the security, but they could have given that data out to a third party under their terms and conditions that they have. And then that third party could have gotten hacked and all of your data could have been leaked as well too.
Yeah, exactly.
I know that. So that happened to Binance a couple months back, is that all these pictures of people going through the KYC process at Binance got leaked. And it wasn't actually Binance that was hacked. It was one of their partners they were working with.
Yeah, right. I mean, and that's the thing, right? I mean, no one reads EULLs. Like that's I agree to your terms and conditions and I've read these terms is like the biggest lie that's been told on the internet, at least at scale. And you can't blame users for that. Like if it takes lawyers to write it, but doesn't take lawyers to read it and agree to it, that feels kind of weird to me.
This is one of the things that is appealing about DeFi is that when you have or at least working with smart contracts in general, is that you're able to see, or it's much more clear of what you're getting on the back end, right? So when I take my BTC and I put it through RenVM, like I know exactly what's popping out on the other side.
Yeah, and you know exactly what's getting exposed, and you're in control of that process. I think is the big one. Things are as private and as secure as you want them to be. You're not just trusting that another company hasn't snuck something weird into their EUL that you haven't noticed.
How many dark nodes are online at the moment?
We have 60 dark nodes online on our ChaosNet right now. So they're run almost entirely by members of the community, which is great. Basically, we are using the ChaosNet as it's like a test net that runs on other people's main nets, which is kind of a uniquely weird position to be in as an interoperability blockchain. Is you want to test with their real systems, but not have your real system with the real system. So that's our ChaosNet, and that's what it is and why it exists. So those 60 dark nodes are members of the community helping us understand, and I have no idea who they are. It's completely permissionless in that sense. Helping us understand under what conditions are people running dark nodes, what effect do those nodes have on the system when we try and do things like upgrades, and we can't do we can't do a centralized upgrade. So it's very helpful in that sense, and it's a small playground to test out economic incentives. At our peak, when we launched one of our testnets, we had about 250 dark nodes. I think that's the number that is in my head. And that equates to 25 million Ren, I think. Yes. And that's now been shut down since then. That was more of a short-lived test network that we were playing with. So yeah, about 60 at the moment.
How do the updates work? I mean, is it that you're soft forking every time, or how is the
I'm guessing look at the dark node configuration. Basically, there are two kinds of upgrades that break things and upgrades that don't break things. So for example, there's an upgrade where you say, okay, nothing really is different about the system, but we found a more efficient way to store data so that instead of taking up a gigabyte, it takes up a megabyte. One dark node could make that upgrade and no one else could make that upgrade, and no one would notice. The system would carry on. It's just that your particular dark node's being slightly more efficient than everyone else's, and so maybe your system's slightly cheaper to run. So those kind of upgrades, we just push them out. And dark nodes can be configured to automatically take those upgrades and just patch them in and just take them and go. In the future, once we get closer and closer to mainnet 1, there is going to have to be a governance process in place, which is ultimately going to be dark nodes signaling, I'm willing to take on this upgrade. And they'll have to do that for breaking changes. And those breaking changes will have to be rolled out in a way that they don't immediately break. So, you can think about version 1, 2, and 3, where version 2 is compatible with version 1 and version 3 is compatible with version 2, but not with version 1, and so on and so forth. And that kind of lets you stage a rollout over time, because you can't expect everyone at the exact same moment to release an upgrade. To take on the upgrade.
Right.
So it does make the upgrade system slower than you would think in a traditional system.
And what are the hardware requirements of running a node at the moment?
I can't remember off the top of my head, but they are the smallest instance, or the free instance on AWS. So the AWS has that's our target. They have a 1 year. You can run one of these virtual machines on AWS for free for a year. That's, I guess, how they onboard people, and we've targeted those specs. And I think it's two CPUs and 1 gig of RAM from memory, maybe 1 CPU, 1 gig of RAM. But it's a very cheap machine. Even after the fact, it costs you $10 per month if you are paying month by month. And if you buy 1 to 3 years, you can get up to like 70% off that price. So the dark node hardware can be incredibly cheap to operate.
Mm-hmm. And what about running it at home? I mean, that's a possibility as well too, right?
In theory, yes. But in practice, we don't recommend that. And we don't provide tools to enable people to do that because we don't want people to do it. And the reason for that is that unlike other systems where nodes can kind of come in and out of the network. So for Ethereum, you could just like spin up a miner, and if you mine a block, great, and if you don't, that's fine. But with RenVM, the dark nodes have to be more active in their participation because the underlying system needs lots of interactivity between the dark nodes. And the reality is that on a home network, on a home machine, it's just too difficult to maintain your node as being online and connected to the internet 24/7. Cloud providers have a tough time doing it. They've got teams and teams of experts that's their entire job.
Yeah. So you need like 99% uptime.
That's right. Yeah. Yeah. You need high uptime requirements, and we haven't yet settled on exactly what those uptime requirements are before nodes start getting kicked out of the system for not being online, and start losing the rewards that they've been earning, and potentially even getting their bonds slashed for maliciously being offline. But that's ultimately the risk that you would take by running it at home, is that maybe your system's going to crash, or there's going to be power outage in your area, or you forgot to pay your bill that month and your internet connection disconnects, and you could potentially lose all the rewards that you'd accrued that month, or you could even find yourself getting slashed some of your bond.
How is the security preserved on the network by Ren? If you're transferring 1 BTC across, or just a large amount of BTC, what would be the attack vectors for people who are trying to maliciously harm the network?
There are two kinds of properties that you want to preserve in any distributed system. There's safety properties and there's liveliness properties. So safety properties are things that must always hold or must never hold. I guess never is kind of just like it's an always property, but in reverse. And liveliness is properties that must eventually hold, right? So typically when people talk about security, they often think about safety properties. No one should ever be able to steal Bitcoin from the network. That's a safety property. And then there's also liveliness properties, though, which is that if I send a Bitcoin to RenVM, it should eventually give me 1 Ren Bitcoin on Ethereum. The sooner, the better. So you have to consider both attack vectors. In the safety aspect, there's a 1/3 threshold. So the way that it works is that the private key that's holding the Bitcoin in escrow while it's floating around on Ethereum, that private key is not actually known by anyone. It's been generated and maintained in secret by the network of machines. And you would have to collude with 1/3 or more of those machines in order to reveal the private key and steal the funds. If you weren't able to collude and you were just trying to trick them into doing the wrong kind of transaction, then you'd need 2/3, which is even harder. So we focus on the 1/3 case because that's the easier one. Same with liveliness. So if you wanted to stop a transaction from resulting in a minting, so someone either sent Bitcoin and they were expecting to get Ren Bitcoin, or they burnt Ren Bitcoin and they were expecting to get back Bitcoin, you could sort of censor that transaction with 1/3 of the network colluding. So really the safety properties and liveness properties for us are 33% of a shard. And so that's ultimately how you keep the network secure. It's the same properties that you see in other Byzantine networks, where 33% is the limit at which things like double spend start becoming possible. Forks in the network start becoming possible where they shouldn't happen.
So is there randomizations taking place in how the nodes are being placed in?
Yeah, so the placement of the nodes is constantly changing. So we have these intervals called epochs, and every epoch the nodes disband.
Is it 24 hours or
a new one comes in? It used to be 24 hours. It's now 4 weeks. which is a huge difference. It was 24 hours back in the day of the dark pools, which had a very different sort of shuffling need. And since then, we've moved to a 4-week one. There are some internal proposals that we're looking at where it's a different time period depending on what it is that you're doing. So if you want to deregister, then the interval is 4 weeks. But if you want to, like the way that it shuffles, I don't think we'll push it lower than 24 hours at any point. But even at 24 hours, if we go back in that direction, it's incredibly hard to coordinate attack in 24 hours with 193 nodes that you don't know who they are.
But you talked about how cheap it is to run an AWS node, right? So what prevents me from, if there's 200 nodes online right now, what prevents me from spinning up 400 AWS nodes and then owning 2/3 of the nodes on the network?
The thing that prevents you from doing that is the REN bond. So in order for that node to actually be considered by other nodes as a dark node, as a real entity in the system, you have to prove that you've bonded 100,000 REN tokens. So unless you have 400 times 100,000 REN tokens, you won't be able to spin up that many nodes. So the capital constraint is not in the cost of running the physical hardware, it's in the cost of staking, which is kind of the same as any proof of stake network. Is the idea that you try to make hardware not the limiting factor, and you make the actual token the limiting factor.
So there would need to be expansion in the token price to meet the amount of value that's coming through.
Yeah, that's right. So you either need more nodes bonded, or you need the cost of every bond to be higher, which would mean more a higher price of rent. And the way that we drive that price is that the nodes get a fee for all of this work that they're doing. So they get a velocity fee, which is basically every time assets move between chains, they get a clip. And they get a volume fee, which is basically however much volume is under management, they get a per annum cut of that as well. And so you can easily model the expected price of rent. You can look at the fees that are coming in and say, well, if we're earning, $1 million a year in fees, then by all rights, the total network value of bonded rent should be $10 million. Right? You're making 10% every year. And a dark node would be crazy to sell its rent at a valuation of 1 million, right? Because you could just hang on for the rent for 1 year instead and then make the exact same price and still have the asset under management. And so this idea is that when you need a high value of REN to increase the network security, the more that the system is used. But the more that the system is used, the more fees are being generated, so the higher the value of REN. So you get this kind of positive feedback loop.
It's pretty cool. So there's actually fundamental valuations that you can do to determine whether you should be running a node or be unbonded or bonded at the moment.
Absolutely. Yeah.
It's very cool.
Yeah. And our command center tells you that when you go to register a dark node, it's like, are you sure you want to do this? Because there are a ton of dark nodes running right now. So the average income is like nothing. You may even be losing money. I think the 60 dark nodes that are running right now are technically losing money because the chaos net fees are very low because it's an unaudited version of the system. So there's not a huge amount of velocity or volume in it. So the cost of running the physical hardware, even though it's very cheap, I think is maybe breaking even or actually just slightly more expensive than the fees that those nodes are earning.
How much BTC is locked up in WBTC right now?
In WBTC?
Yeah. I mean, is it?
I think it's in the millions, like 1 million,
like only like a million or 10 million or 100 million.
I don't think it's in the tens. I think it's in the. It's much lower than that.
What's the growth process then for you guys to start having the issuance of RenBTC? I mean,
sorry,
5
million, 5
right?
million.
So
just looked it up then.
What's the growth process then for you guys to start building up those volumes and having people move it through Ren once the mainnet launches?
So there are two plays for us. One is velocity and one is volume. Velocity is preferable because velocity generates fees, which drives the value of Ren up, but it doesn't consume bandwidth. So velocity is not if you move a Bitcoin in and out of the network for some purpose, usually trading, that Bitcoin's not sitting in Ethereum, which means it's not being held by RenVM. So there's no incentive to attack RenVM because even if you attacked it, it's not holding on to any assets. So such an attack is worthless to you as an attacker. Now, volume is a separate story. Volume also has to generate income, but it consumes bandwidth. So the more that you have locked in RenVM, suddenly the bigger the incentive is to attack the network, because you might be able to run away with a lot of money. So on the velocity side, it's about integrating with DEXs and exchanges in general, so that people can be trading Bitcoin like they're trading ERC20s. So they can trade, maybe against Kyber or Uniswap. And we have a Uniswap pool for our Chaos net. And we also have an example DEX that shows off, what that experience can be like. And that allows people to sort of move velocity through the system. Obviously, there's a little bit of locked value associated with that, a little bit of volume, because you have to have someone locking up an amount of Ren Bitcoin in either in the liquidity pool or in the reserve, whatever the system happens to be. Then on the other side, driving high volume is looking at systems like MakerDAO, Compound, so like any kind of lending platform or collateralization platform in general. That's where you start seeing huge bulk assets under management. I think DeFi at the moment, last time I checked, was like $500 million.
It's like 800 now. It's like 800
under management.
Yeah. 800.
Yeah. Wow, that grows so fast. Law of exponentials, huh? So yeah, the way that we modeled the current fees is that if you look at the way that assets are priced in crypto based on the revenue that they're generating for the token holders, if you look at the ratio of velocity to volume, and you look at the fees that we've instituted, then it's secure to hold, at that time, I think it was 500 million assets under management inside the RenVM system. So you could double all of the volume in DeFi by bringing something like Ren Bitcoin to it. Now, that adoption process is obviously going to be slow. We don't expect that we'll launch mainnet sub-zero and then tomorrow or the day after, suddenly you got $500 million in Ren Bitcoin. It's something that has to happen over time, which is why we have a sort of slow multi-phase rollout system that allows us to provide stronger but more centralized guarantees in the beginning, where we say, okay, hey guys, we know the economic incentives aren't here yet, but we promise to run dark nodes and a core community of reputable projects and investors promise to run dark nodes that will keep the network secure, even though the economic incentives aren't there yet. And that helps us bootstrap the system and get it to a stage where there's enough Ren locked up that a large-scale attack becomes unfeasible, even a large-scale like lending attack becomes unfeasible, where there's enough velocity and enough volume that the economic incentives are aligned, and then the sort of we can step back and let go of control over the network.
Yeah, no, I mean that makes sense. I think it'll be interesting. I think in the next year or two is to see if BTC can play catch up in DeFi, or at least if Ethereum kind of cements itself as the primary DeFi provider. So you have like money on chain that's coming soon. There's trustless BTC, and then also RSK as well, which are, I think, working to try to copy what has been built on Ethereum so far. But I don't know if there'll be good community support for it. So having a system,
I think it's a big risk with those projects, right? Is like bringing Bitcoin to your community is very different from bringing Bitcoin to someone else's community. And Ethereum, no doubt, has the biggest community. And just to be able to the cool thing about things like Uniswap and Kyber is that there's no governance process over being able to add an ERC20 to it. And at the end of the day, from a smart contract perspective, RenBTC is just an ERC20. So it's very easy to spin up DEX pools to drive that initial volume and drive that initial liquidity back and forth between the chains, and then to make sure that there's a market for Bitcoin, or for Ren Bitcoin specifically, on Ethereum. And then once there's a market for that, then you can start thinking about lending platforms and collateral platforms, because those platforms need liquidity to work against.
Right, and it's kind of the long-term hope, right? Is that you could use its long-term goal is take your Bitcoin or Zcash or whatever token there is, and then bring it into the Ethereum DeFi system. Yeah,
that's right. Or maybe if it goes the other way, maybe one day Bitcoin will implement a smart contracting system, and people will need to bring Ethereum into Bitcoin. Who knows?
That would be RSK, right? Because the general sense of, I could be wrong, but the general sense of what I've seen from the Bitcoin people is that Bitcoin's just fine. it doesn't need to be changed much, and that it works. So why add other features which could?
I mean, it depends what you want from it.
Yeah.
If you're happy with just money, just a store of value, then Bitcoin works really, really well. It's very cheap, and it's actually very fast. Like, I know that sounds like maybe that's a controversial opinion, but like last time I sent money from someone over an international border, it took like 3 days. So, my 1 hour transaction's looking pretty good.
I mean, I don't know. I mean, this is something that I feel like I say this in every episode, but I think that, when it comes down to it at the end of the day, people want dollars most of all. If you're in an economy where you have high inflation, people tend to go towards the currency with the greatest stability. And at the moment, that's the dollar. So even though it does have inflation and you're losing 2% a year, you don't really see that. And especially in comparison, if you're losing 40% or 50 or even 3,000%, like in Venezuela, move your money to dollars, because then dollars pretty much accepted everywhere in the world. You could go from country to country and it'll still work. So with DeFi, what they've done with Maker and being able to mint DAI, I think it's a game changer, because now we have a fully trustless, fully decentralized dollar that can exist on chain and be used for whatever people need to, whether it's payrolls or just sending money across borders or even just saving money. It opens so many doors that weren't possible before by just holding Bitcoin, because of the volatility associated with it.
Yeah, and the question will be that if Bitcoin ever does deploy its own smart contract system, or if Risk manages to get mindshare of developers, whether or not you'll see a clone of DAI pop up on these other ecosystems. But then I think you're going to end up in this other weird interoperability problem where you'd have DAI 1 and DAI 2, and people are like, well, which one are we working with? Which one are we accepting?
Mm-hmm.
And that's kind of an interesting problem, because you don't have that with the US dollar in the real world.
I just saw,
it's just one USD.
I just saw yesterday that there's a project for Polkadot which just launched. It's called Akala, and they are going to be issuing a Akala dollar, so like an AUSD on their on Polkadot that could be used on Ethereum as well too. So you can
So you need a bridge from Polkadot to Ethereum in order for that to be possible.
Correct.
I haven't looked at their system, so I'm not sure what their bridge is. Typically, the bridges that we see popping up are like get a dozen nodes together and create a multi-sig.
Yeah, I think that's what they wanted to start building further on. So,
but I think I guess my point is that interoperability becomes even more important when the ecosystem diversifies, if it diversifies, and you start, if Polkadot comes in and wins a lot of mind share. Right now, interoperability, one could argue, is actually potentially less important than it might be tomorrow, because today ETH is the clear winner when it comes to DeFi and just developers on blockchain in general. Whereas tomorrow, maybe Polkadot has equal mindshare to Ethereum and equal mindshare to Risk. And now you have these three isolated ecosystems that are each 1/3 the value of each other if they had all just been one ecosystem to begin with. And so interoperability becomes even more important to make sure that they can tap into each other.
What is happening with the Ren Alliance? And have there been any, can you comment on any projects that have come into it so far?
We can't comment on that. We will do an announcement of all the projects that are in it all at once, which is why we're not commenting on it ahead of time. Because we just don't want to be unfair to different projects and talk about one more than the other or what have you. But basically, the Ren Alliance is a group of projects that are committed to using RenVM in some way or helping us drive our ecosystem. So, and that can mean a bunch of different things. The most obvious one is the project is going to use RenBTC. It's going to list RenBTC on its platform in some way. And there are different levels of integration that you can go with. The second is that they will help us run the sub-zero and zero sort of semi-centralized, semi-decentralized setup. So in that initial phase where we're trying to guarantee economic stability, we don't want to be the only ones running dark nodes. We do want other projects to get involved, whether those be the reputable investors that have backed us, or whether those be reputable projects in the space. And then the third way is that there have been a lot of projects that they're still waiting to see how RenBTC goes, if you want to call it that, and they need to do that because, as I was talking about before, let's say you have a lending platform, you need liquidity to exist, and you need to know how much slippage you're going to be exposed to before you can adopt RenBTC responsibly. And those projects, though, have provided us a lot of feedback on the design of RenVM, and have actually had a big impact on some of its design setups. Because obviously we don't want to just build this thing in the dark and say, oh, well, we reckon this is secure, and then we're going to go launch it. We talk to these other projects and say, hey, these are the security parameters. Does that feel right to you? Is that good enough for your project? Does that meet your standard? And they say yes, or they say, yes, but we'd want to see that tweaked, or they say no, that's an awful design. And I mean, we haven't had anyone to say that, but they give us feedback on exactly how to build the system and some of the changes that have come to our ecosystem. So that's the Ren Alliance, is groups of projects that are essentially contributing to RenVM, whether that be through adopting RenBTC, whether that be through helping us secure the network by running dark nodes in its initial phase, or whether that be by fundamentally helping us with the design.
Could a centralized exchange integrate RenVM?
It could, other than to provide liquidity on RenBTC. I'm not sure why it would do that.
Well, I mean, I think about like in the future, right? You have, let's say you're using Binance, and I'm just going to use them as an example, right? So you're going to choose what you want to withdraw, right? So you go to Bitcoin, but then it says, do you want to withdraw Bitcoin that's going to Binance Chain or Ethereum or all these different options, right? And if you click the Ethereum one, then it spits out RenBTC, where you get options about what kind of BTC spits out.
I mean, this is the cool thing about the way that RenVM is designed, is that it's completely compatible with normal Bitcoin transactions. So right now, and I've already done this. I bought Zcash on Ethereum from my Binance wallet. I withdrew BTC from my Binance wallet straight onto Ethereum, and it did a trade into DAI, and then that DAI went into Zcash, and then I withdrew that Zcash straight back out into I think it was my Coinbase wallet. So in that sense, you can already do that. You can already withdraw straight from a centralized exchange into RenBTC, and you can already turn RenBTC, deposit it directly into an exchange. And that's part of the user experience that we've been really focused on getting right, is that to the user, to other systems, centralized, decentralized, doesn't matter. It just looks like a normal transaction, and RenVM takes care of everything else under the hood.
I mean, that's a strange thought experiment, is that if you can essentially use interoperability to bring any token to any, or I guess most tokens to most other blockchains, right? Where would the value aggregate? Would it? So if Bitcoin is not taking that lead, would value essentially move towards Ethereum in the long run, because it would have the greatest amount of interoperability between other blockchains?
If I had to make a bet today, I would say that that's probably what's going to happen, is that the value will aggregate towards Ethereum, because Ethereum already has the mindshare. It already has the $800 million locked up, and that's really hard to compete with.
Mm-hmm.
There's a huge DAI supply. There's the largest volumes of decentralized lending. There's millions of dollars moving back and forth a day on dexes. It's going to be a long time before I think anyone can unseat that. And in the meantime, all the new projects are just going to gravitate towards it. Obviously, there's a reason why RenVM is focusing on bringing Bitcoin to Ethereum, not bringing Bitcoin to something else.
Correct, because that's where all the functionality is on Ethereum, but all the value and liquidity is locked up in Bitcoin.
Exactly, and I think if we bring that into the Ethereum ecosystem, Ethereum in general will benefit immensely from that.
Hugely, yeah. That's I think a great point to probably wrap things up on, because it's a really succinct way of talking about what Ren is trying to achieve.
Yeah, I think that so as well. It really does summarize our mission. especially for 2020. This will be the year that we get to mainnet, and therefore it'll be the first time we've seen truly decentralized interoperability between blockchains, and that's going to be an exciting moment.
Where can people find Ren and also you?
People can find me on Twitter, or they can jump into our Telegram chat, or they can follow me on Medium. I post a lot of blogs there. We've got our upcoming dev report that's about to be released, first one of this year. But yeah, mostly Telegram and Twitter. Jumping into our Telegram chat, you can ask any kind of question that you want to ask, and usually one of our awesome community members will give the answers, if not myself or one of our community managers.
Cool. Well, Loong, thanks for coming on. It was really fun.
Yeah, thanks so much for having me.
Thank you, Loong, for coming onto the podcast. I had a great time talking with you, and I had some really fun times learning about Ren. So go check out the website. None of this, which we talked about on the podcast today, should be taken for financial advice. Also, make sure to 5 star, subscribe to the podcast, and I will see you again in the next episode.